Morning, everyone, and thank you much for joining me. This is the morning market review, and it is Thursday. It's the 12th of January 2022. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is rshore@fxcm.com. I'm going to go ahead and bring up our disclaimers. First of all, here's the high-risk investment warning. I'll keep this on screen for a few moments. And I just want to double check that everybody can, just the three yeses. Can you see me? Can you see the screen? And can you hear me? I just want to double check we're all okay on that. Okay, excellent. Hey, Zanetta, morning to you. Hey, Anna, Chedrak, nice to have you guys on the webinar as always. Kovis. All right, let's bring up the countries disclaimer. Okay. So it's a little low. Hopefully it doesn't affect us, but nevertheless, we shall endure. I'm looking at two screens again, so I'll try my best to look directly at the camera. If I'm not, it's because I'm looking at the other screen. Just to give you the heads up there. All right, let's start off with the real rate. Now this is a slightly different view to what we look at in terms of time frame. I've gone right down to hourly, with the real. This is the US 10-year minus the, you guys have heard of TIPS, Treasury Inflation Protected Securities. That's effectively what we're looking at here. The second chart over here is the US dollar, and then the indicator below that is actually correlation coefficient between the two series. And what I want to show you is I've put in the value label for correlation coefficient. It's sitting at 89%. All right, so I just want to run through what this means for us. Okay, so just bear with me one moment. I'm going to bring up Microsoft Paint. We'll go through the theory behind the correlation coefficient, and then we're going to come back to the correlation coefficient to make some sense of it. Just bringing up my Microsoft Paint, which is slow, but working. Okay. There's three levels that I want to highlight with regards to a correlation coefficient. And I'll explain to you what it means. So we've got what we call +1. Think about that as 100%. We've got a -1. Think about that as minus 100%. And right in the middle, we've got 0. Okay, so let's say we've got two instruments, instrument A and B. If instrument A and B move together in perfect harmony, in tandem with one another, they're going to tend towards +1. Okay, if they move in perfect tandem with one another, except in opposite directions, then they're going to be -1. So +1 is a perfect correlation, -1 is a perfect inverse correlation. And then if you go to 0, there's no correlation at all. One could be going up, one could be going down. They tend to move independent of one another. So how close are we to 1? Well, we're very close to 1. We're on 89% or 0.89, right? And we've been up for quite some time. Correlations will never hold perfectly, but you can see that we've been traveling pretty close to sort of the 90% level for quite some time. And the reason that we are bringing this up today is because Shedrick's saying the camera is frozen on the screen. All right, let me just try restart that. Okay, hopefully that's better. All right, so the idea here is we're pretty close to 90%. So we moving, the dollar is moving pretty close to the real rate. Why is it important? I'm going to turn off the camera. It's just eating bandwidth. Okay, I'm not sure. The system's slower today. I beg your pardon. All right, my laptop probably needs a reboot. The idea here is we at 3:30 my time, which is going to be 1:30 UK time. Okay, we're going to get the CPI reading. That CPI reading is very important. All eyes are on that CPI reading, and one way or the other, okay, it's going to affect the real rate. And if the correlation coefficient holds at 90%, it's going to affect the dollar, and it should affect the dollar. So by and large, I think that the CPI announcement is very, very important. The Fed, to me, okay, is again behind the curve. They keep talking the aggressive hawkish talk. However, the market's not buying it. The market has a Fed pivot around about June this year. A large part of who's right is going to be pretty much determined by inflation. They don't necessarily look at CPI, they look at something called PCE, but they're very closely linked to one another. So the idea there is we have to know what's happening with CPI. And once we know what's happening with CPI, we have to go straight through the real rate, see how the real rate's reacting, take a look at the dollar, see how the dollar is reacting, make sure that they are in lockstep with one another. Okay, so if we get an inflation reading that's higher than what's expected, then we probably get a movement up in the real rate. We probably get a movement up in the dollar. Okay, let me just draw that in. However, if we do get moderation in inflation, I am expecting a moderation subject to correction. Tomorrow, I might be telling you guys, can you believe that CPI number? Completely surprising. But the idea is, I think that there is a case to be made for moderation, and I think that the path of least resistance is down, and that is, again, I'm going to tag on subject to correction. I simply cannot tell you with any certainty, but I feel that the median CPI, which we looked at yesterday, is starting to roll over. That needs to continue to roll over, and if that represents the sticky part of the CPI basket, if that does roll over, I think we should see moderation in the CPI number. Okay, having said that, let's take a look at some charts. Okay, just interest, we're going to look at DAX, we're going to look at Euro to start off the day. I think we'll take a look at some of the American indices, but I wanted to show you the Chinese 50. This is what's really on my watch list at the moment. What we're looking at here is a weekly chart. This is the 30-week moving average, and you can see that it looks like there's some sort of accumulation that's going on. It's now above its 30-week moving average, and that 30-week moving average has turned up. So if we're using that moving average as a filter, it's pushed up. Take a look at that RSI. Okay, so the RSI is pushed up as well. Now, put in some peaks and troughs to get a primary trend in, and we'll start moving to the other charts. So what we can do is we can put in a trough. Okay, we can put in a peak. So the peak's over here. Here's the higher trough. Okay, so now we've got 3 out of the 4, and I'm just going to go and put in the higher peak here. To be strict, there is an actual higher trough there, and there is a higher peak there. So we would have a series, but just in terms of the spirit of we can see high trough, high peak. So China 50 is now in a bull trend. It's in an uptrend. What's happening on the China 50 side is very interesting. Number one, you've got they've done away with this draconian lockdown. Okay, so there's a lot of pent-up demand that is now going to be unlocked. That's going to be supported by the fact that they've opened up their borders to international travel. Okay? The crackdown on the tech sector, that's starting to be relaxed. The very restrictive borrowing requirements by property developers, that's been relaxed. In other words, there's a movement towards a growth on the Chinese authority sort of policy. What's the risk? COVID infections, okay, and that data is being suppressed at the moment. So what's happening around the COVID spread, we don't really know, okay, and that, of course, as that spreads, that can affect economic activity. Right now, we do have higher cutoff, higher peak. Okay, so I wanted to just show you that we've got it moving above that Standard & Poor's 30-week moving average, and that moving average starting to turn up. Right, so that's just something that I am following myself. And of course, the RSI, the longer it stays above 50, okay, the greater the chance of further price appreciation. All right, let's take a look at the US dollar just ahead of this CPI release. Okay, so we're going to do this a little closer to the market action. Right, so we're going to go through to the daily chart first. And the chart is in the bearish area. That's between the lower blue, lower red channel. Sorry, lower blue, lower red bands. That's the bearish channel. And the RSI here is below 50. And this is what we talk about. Look how it's been below 50 since October. And you can just see how the momentum has just been completely bearish. And it's been strong. It's not weak momentum, it's strong momentum to the downside. Okay, let's take a look at the hourly chart here. Yesterday we took a look at resistance. It did react off of that resistance, but not all that conclusively, so to speak. I think that makes sense. Eyes are on that CPI, right? There's bets are being made ahead of the CPI, and we'll see how the data prints. Once we get that print, I think moderation, dollar gets hit. Okay, if it's an upside surprise, dollar supported. Let's go through to euro US dollar. Okay, so just like we saw the US dollar was at resistance, here we've got the euro, which is at support. Again, not a big movement, but it did react off that support. Okay, so we did see the indications that there might be some movement, and it did, but it was muted. Again, all eyes on that CPI today. Let's go through to Zanetta has just written about the US dollar Japanese yen. Okay, so US dollar Japanese yen is a currency I'm not a fan of. I won't trade it because of the Japanese policy to influence the markets, and the way they're doing that is they are manipulating their 10-year yield. They moved it from a defense of 25 basis points to a defense of 50 basis points. I don't know when they're going to relax that. I don't know how they're going to manage that, and that to me suggests we've got to be cautious. There's no doubt, okay, that there has been some bearish pressure to the downside. It's in no man's land at the moment, but you can see the RSI is under 50, and you can actually see the downside share 1, 2, 2, 3. Okay, and here's a nice swing down. Theoretically, if we had to suggest that the defense of the Japanese yen would be dropped, and given that there is some sort of moderation in the US inflation, I think that the path is to the downside. So I think on a sort of intrinsic value, that certainly seems to be the direction. A weakening of the US dollar against the Japanese yen. The Japanese yen has been kept artificially low relative. So I think that it makes sense, Zanetta. I think it does make sense that support here If it's broken, we do sit to the downside. Again, I just don't trust the monetary authorities on the Japanese side, simply because of their interference in their bond market. All right, let's take a look at the DAX. All right, DAX looking pretty impressive. Okay, you can see that it is in zone 1. Okay, it's in zone 1, upper red, upper blue. You can see that the RSI here is flashing a little bit of a warning for us. Okay. So it's gone overbought. So where the stochastic does not have an overbought or an oversold level, if textbooks say it does, I promise you it doesn't. The mathematics don't make any provision for overbought, oversold on the stochastic. In fact, the way that George Lane designed stochastic was really around divergent signals, nothing to do with overbought, oversold. So we don't look at a stochastic with regards to overbought, oversold, but we look at RSI, which does have a very good mechanism for overbought, oversold. And here you can see it's starting to flash a warning. I think this is healthy, by the way. We've got a very impressive movement in DAX here. It's hugging the upper Bollinger, but look at the Bollingers moving away from each other. So there's a nice expansion in volatility. If you go down to the weekly, you'll see why we need this overbought condition. Okay, Indrid saying you got a nice 70 pips yesterday on the DAX. Beautiful. Love to hear that. All right, here you can see the okay. If we can get some sort of overbought condition on the daily, just rectifying and normalizing, then we should get a 2-3 correction on the weekly. Once we get that, I think it sets up the platform for the next impulse. So DAX, just be very cautious if you are looking to go long. It does to me seem as if it's getting a little risky. We can stay overbought for a few days. It happened over here, okay, which of course there was some nice movement, but then it did normalize and we did get back. And I think we might get similar. The ambiguity or the confusion that arises is going to be around the CPI number. If that CPI number comes below, it shows moderation. I actually think DAX and risk markets react positively. However, again, if somebody is taking a long, and if that is the case, then just be aware that we are overbought here. If there is an upside surprise because of this over condition, it's going to be hit quite badly to the downside. So those are the risks involved right there. Alrighty, I think that is, let's just look at the NASDAQ, because the NASDAQ is very, very sensitive to interest rates, more so than the Dow, more so than the S&P. It hit its support here. It's looking to bounce quite nicely. There is a movement back into the tech sector. The obvious question we've got to ask is why? Why is that? It's because market participants are seeing the Fed pivot. So that means we've got to keep on top of whether there is going to be a Fed pivot or whether there isn't going to be a Fed pivot, one way or the other. Okay, we have to keep on top of that. It moved into zone 1. Take a look at this RSI. RSI has moved above 50. The longer it's above 50, the higher the chances for further price appreciation. If you go down to the hourly, okay, you can see that this central pivot here is offering some really nice support. Okay, so if it pulls back to that central pivot, keep an eye on that. Resistance, turn support. That's the principle of what we call polarity. By the way, we're going to sign off with one caveat, one warning. Please be very careful around the CPI release. That's 130 UK, 330 ZA. It's going to cause volatility. One way or the other, okay, the market's going to move. And I would expect some sort of moderation there, but again, subject to correction. With that all said and done, if there's any questions, please go ahead and type those in. Any questions, please go ahead and type those in. All right, nothing coming through. So I think what we will do is we're going to end at this point. Have a good day ahead, guys. Good evening. We'll do it all again tomorrow. We'll talk about the inflation release tomorrow. Thanks, guys.